Hello, it's been a choppy week for energy prices, so let's take a look at the week's actions in some more detail. Oil rose nearly $1 per barrel on Monday. Prices were driven higher by the production cuts of OPEC and other major exporting countries, as well as US sanctions on exports from Venezuela and Iran. Prices continued to rise throughout Tuesday, with a further $0.5 per barrel being added to the front month's contract. The weekly EIA report was released on Wednesday, showing an increase in stocks of 2.8 million barrels compared to the previous week, and as a result, prices softened. In the week of two halves, prices continued to soften on Thursday. Brent closed just over $67 per barrel, that's up nearly 80 cents compared to last Friday.
Despite a bullish oil on Monday, most gas prices took their direction from a comfortable supply and demand picture and closed lower day on day. All contracts then rose on Tuesday, fueled by higher oil and in particular carbon prices. The system moved into the short position, which further impacted the prompt. All contracts eased on Wednesday morning, although downward movement was short-lived. A late rally across the wider fuels market pressured gas higher, as well as a weak sterling relative to the euro. Those contracts gained around 1 pence per firm. There was some relief for near-term prices on Thursday, with losses on oil providing some direction. Last night, near-term contracts closed lower than last Friday, whilst contracts beyond summer 20 posted gains.
Power contracts softened on Monday, although the losses seen on the near curve were marginal. Downward pressure provided by lower gas was countered by a reduction in wind generation. All contracts rose on Tuesday as coal and carbon prices rose sharply. Gains were extended into Wednesday's session, with most contracts adding around £1 per megawatt hour. Despite a choppy day's trading on Thursday, most contracts closed range-bound to the previous session. Last night, all curve power contracts closed higher than last Friday. You can download the full version of this report from our website. Thank you for watching, and we'll see you next week.